Hi everyone, this is Emily and I'm a digital transformation consultant at Hyperbots Inc. And today I'm very happy to have John on the call with me, who is the VP of FP&A at Extreme Reach. So thank you so much, John, for joining us.
No problem.
The topic we'd be discussing today is GL codes and debit or credit entries for vendor invoices. And I'd want to kick it off by asking the first question, which is, John, can you explain what happens in the general ledger when a vendor invoice with multiple items is posted?
Yeah, when a vendor invoice has multiple items, the GL, it looks at those items based on their classification and where they should go from both a tax accounting account basis, department even, and those types of things. So it will go in and classify everything correctly based on the item code. So it's not by the invoice or customer. That's one thing to note because some people get confused when you look at one account. If some items on the same invoice might go to tax lines versus office furniture versus computer equipment. So one example is that like you get you have two items, office furniture and computer equipment. One for the office furniture is $10,000. Your computer equipment's $5,000. Each of these items would be subject to different tax rates potentially. And item one would have a sales tax rate of 5%, the county tax sales of 2%. Item two might have 6% and 1.5%. The total invoice amount before the tax is $15,000. Then you will get a office furniture. The item code will go to office furniture and to the account code for office furniture. And if it's over your limits and everything, then it will capitalize that versus hit your expense directly. And you'll have that $10,000 with the $500 of sales tax and county tax 200 for a total 700 hit the tax lines, and then your computer equipment of 5,000 and the 6% 375 for 375 of taxes. So it will calc directly based on those item codes. So it's important to get those right.
So, John, what debit and credit entries that need to be recorded in the GL for such an invoice?
Yeah, for such an invoice, you need the debit entries. You're going to furniture and fixtures because you're creating those assets for $10,000, which would be a numbered code ideally too, with maybe 1500 as the account number. And it will record that office furniture as an asset. Computer equipment, it's over $5,000. So if that's your threshold and things too, it will record and purchase debit the computer equipment as an asset as well. Sales tax payable, debit $800, and the county sales tax debit $275 as well, the payable side. And then your credit entries would be the accounts payable for $16,075, which includes the full amount plus the taxes.
Understood. So, John, why are these specific GL codes chosen and what do they represent in the context of financial reporting?
Yeah, so these GL codes are chosen based on the nature of the transaction. So because the item is furniture and fixtures, you're going to hit that GL code 1500, which represents the capital expenditures for office furniture. So by debiting this account, we can increase the value of our fixed assets on the balance sheet, and you would set up the schedule too for amortization as well, that we'll talk about in another episode, I guess, or conversation. But computer equipment asset would be 1510. Similar to above, this code represents the capital expenditure for computer equipment. It debits and increases that fixed asset as well, so you can start amortizing appropriately based on what that code amortization is. So if it's 1 year, 3 year, 5 year, those types of things, it will also pick based on the code that you put. State sales tax payable. These codes represent the liabilities for sales tax owed to the state and county tax authorities, respectively. So you'll debit these accounts temporarily, reflecting the recognition of the tax liability until the payment is made. And accounts payable, same sort of thing. Liability account representing the total amount. The choice of these GL codes, it ensures proper classification, accurate financial reporting of these items.
And just out of curiosity, how would the entries differ if this invoice was, let's say, for operational expenses instead of capital items?
Yeah, the main difference is that it would go directly to your expense. So it hit generally a 6,200, 6,300, or whatever your numbering system is for the P&L accounts. So
Mhm.
you would hit office supplies and hit the $10,000 as an expense. And then the IT services would be $5,000 as well. So you would, it's two different accounts, and your sales tax though would remain the same, and you would have to have the office supplies expense and IT services, and then the state sales tax payables and county sales tax payables.
Got it. So, John, what challenges do organizations face when posting invoices with multiple items and varying tax rates, and how can they address these challenges?
Yeah, so to address these challenges and to make sure that when you're posting the invoices with multiple items and varying tax rates is making sure that you have matching tax rates. So different items may have different tax rates depending on the jurisdiction. It may even be if it's a resale item too, you have to, there's other rules in there too that you might be exempt. So it can check those types of things as well. It also, if you're paying the taxes versus and it's self tax versus you're paying the tax directly to the vendor, those are different codings as well. So you have to make sure that you get all those correct. So complexity and matching tax rates is critical, and it's complex, particularly in the US with it's by jurisdiction. Multiple GL codes also complicates the data entry since it's not just you don't just purchase one item at a time in one invoice. It's many items can be. So those have all different rules depending on it can be services and potentially items that you're doing, and then they have different tax rates. To address these challenges too, you can use AI and machine learning to classify these invoice items to apply the
Mhm.
correct rates and make sure that it does capitalize when it's supposed to be capitalized versus going to the expense rate, which would also affect your income tax basis. So integrate with the tax engines for those jurisdictions. You can also have the validation checks, and that will ensure that you have accurate financials.
And one last question to summarize everything, John. Now that you mentioned AI and ML, right? How can technology, particularly AI, help in improving the accuracy and efficiency of GL entries for vendor invoices?
AI can significantly enhance the accuracy of the GL entries because you can have that data extraction from the invoice and make sure that you're capturing. It has both item codes, item descriptions, all those things. It can really check and make sure that you're actively getting it through the OCR, and you can also use the natural language processing techniques to reduce any manual data entry errors. You can also do smart classifications based on the AI models can classify each item of the invoice to correct GL codes. So you can have it go through and look at the historical data plus predefined rules, and you can ensure that those items are classified correctly. The tax calculations with compliance, AI can automate that application of the correct tax rates and make sure that you're applying those correctly as well. You also have detection of anomalies. That
Mhm.
is, if there's unusual patterns or discrepancies in the invoice, AI can pick those up and alert the finance team for an extra review. So that can obviously enhance our quality of our financials and make sure that we're accurately stating everything, and it can also speed up our time.
Thank you so much, John, for being here with us and talking to us about GL codes and debit or credit entries for vendor invoices. It was really great having you, and the discussion was really insightful. So, thank you so much.